Good morning, everyone. Happy Monday. I'll be taking over this morning's host for Alejandro. Honestly, after one of the worst weeks of price action I can remember last week, a bunch of chop through the entire indices. We finally have a lot going on this week, a bunch of high motion drivers in economic data. We got earnings coming up this week. We got a great panel to talk about it. Let's start it off with diamond trades.
What's going on, Mander? Happy Monday, like you said. Definitely a busy week in terms of news and data and earnings. And yeah, the market was pretty slow last week, so hopefully that'll pick up as we get some of this new information in. Excited to get after it.
Yeah, fingers crossed we get some good price action this week. Ramsay Rippers. All right, and stock Snipa.
Good morning.
Good morning. All right, let's send it right back to Diamond. We'll take Fed forecast right here.
Yeah, so let's jump right into it. We can go ahead and get started with the economic calendar. As Mander was talking about, we have some high impact news towards the end of the week. Really just some housing and manufacturing data to start the week. Monday and Tuesday, Chicago and Dallas Fed manufacturing indexes, and S&P Case-Shiller home prices tomorrow, which I know Mander is probably geeked about. Guy loves home prices. New home sales tomorrow also at around 10. And then we've got durable goods coming in on Wednesday, GDP growth rate coming on Thursday, and then core PCE and UMich sentiment. That's the final reading for April. Those will come in towards the end of the week. So should definitely pick up here as we get into the end of April. And then we turn the calendar. We start a new month next week where we'll have even more of that April economic data. So the next 2 weeks should be pretty busy as far as economic data goes. This week is not just economic data, though. We've also got earnings. So we have a massive amount of earnings this week, about 180 of the 500 S&P names and about 14 of the 30 Dow stocks are reporting this week. Big tech in particular is in focus, with Microsoft and Google both reporting on Tuesday after the close, followed by Meta on Wednesday and Amazon and Intel on Thursday. Not just tech, though. This week we've got some consumer staples giants like Coca-Cola and PepsiCo also reporting, Chipotle, as well as some energy names, Exxon and Chevron reporting on Friday. And then we've also got some of the industrials, CAT, GE, 3M will be reporting a little bit earlier in the week. So quite a bit of earnings to come out this week. Investors will get a further look at how a lot of these companies fared during Q1 amid higher input costs, a tight labor market, and a banking crisis. Speaking of the banking crisis, last thing we'll hit, we have First Republic reporting today after the close. So First Republic Bank was one of those banks that was tied in with the SVB and Signature Bank collapse. Many people thought that First Republic would be sort of next, that ticker symbol FRC. As you can see, they're down 88% year to date. Regulators actually stepped in during that March crisis, along with some of the larger banks like JP Morgan, Citi, and Wells Fargo, et cetera, to actually backstop some of the deposits they parked somewhere north, I want to say, of 9 billion of deposits. I think it was even more than that. I think it was about 30 billion, parked about 30 billion of uninsured deposits at FRC Bank to handle some of the deposit outflows that was going on, some of the contagion in the system. So they're going to report earnings today. We'll get a deeper look at exactly what sort of damage was done back during that March bank run. Several of the large mega banks that have reported earnings so far this quarter have met or beat analyst expectations. This week, we'll get a deeper look at the regional banks. I believe that we have Bank of Hawaii reporting. We have PacWest Bank Corp and New York Community Bank Corp, which was deeply tied to the Signature Bank failure last month. So should definitely be an interesting week of both economic data and earnings. Mander, what do you got?
Yeah, a bunch of stuff coming up this week. And you look at that First Republic chart, you would like to think it could only upside surprise, down 88%, but they did have a lot of contagion risk in their hold and maturity bond portfolio, similar to Signature, similar to Silicon Valley. So I don't know. I think that'll be a really big one to watch. And I wanted to cover the Tesla numbers for last week, because going into all the earnings we had this week, that's really the first one of the megas to report, and the numbers did not come out great. So the service level numbers of revenue and EPS kind of came in right at Wall Street expectations, with revenue at $23.3 billion for the quarter, which was down 4% quarter over quarter, but still up 24% year over year. And it was right in line with expectations. Same with EPS. But where investors kind of got spooked. Tesla was down 10% at the open on Thursday after the earnings, was with the margin. So gross profit margin here fell 9.7% year over year, down to 19.3. Operating margin down 7.8% year over year, down to 11.4, well below estimates. And then net income came in at 2.5 billion, which had the net profit margin fall 7% year over year. So all those numbers, along with the 87% miss in free cash flow for the quarter, kind of scared investors on a name here that we were talking about last week. It was really priced for perfection going into earnings, trading at like a 50 PE pre-earnings here. A lot of people were really hoping that these price cuts were going to boost revenues enough that the margin decrease wasn't quite a factor, but obviously not the case, right? And as Tesla kind of transitions out of this mega growth stage into a more stable, expanding company here, that revenue growth year over year is obviously going to slow. But part of the valuation, one of the big parts of that valuation is the margins that they operated at, which were triple and quadruple the competitors. And as it kind of looks like those are starting to dwindle off, inventory still didn't move here. If we take a look at this chart, Tesla inventory still crept up the entire quarter after the price cuts. These are the Model 3 and the Model Y here that had the biggest price cuts, so much so that they even had to do a second round of price cuts the day before the earnings report on Wednesday. So I don't know. I think this one in particular kind of shows, this is obviously one of the more interest rate sensitive markets here, but I think this kind of shows that, that monetary policy is finally starting to catch up, where consumer demand is definitely decreasing. Even after a $5,000 price cut on two models here, Tesla still can't push these cars off the lot. And so as we go into Microsoft here, like how were they able to fix that Azure downturn we saw last year as companies are spending less? With Google, do they have any increase in ad revenues? I think, corporate expenditure is still decreasing. How are they faring with the decrease in ad revenue last quarter? Amazon coming off a quarter of just 3 cents of profit per share last quarter, and Meta, of course, a big one here. Were they able to keep the profitability uptrend going after that Q3 landslide last year? I think we're going into, some really, really big earnings here, especially for megas after a bunch of this money got parked there post bank run. A lot of these names are up 50+% after the SVB bank run there. So how are these numbers going to come out? Are they able to maintain these valuations?
So what I was thinking is, like, everything that you just said makes so much sense, and I can't see any of them being the storyline by the end of this week. I have a feeling that by the end of this week, the storyline will be, look at how transitional and transformational this entire movement into artificial intelligence and like how that's going to benefit a lot of the leaders in this space, the Googles, the Microsofts of the world, and the Metas of the world. I feel like that's what you're gonna hear a lot of on these earnings calls, as opposed to, hey, like, our margins may have slipped a little bit in Q1, right? Like, I'm sure they're going to mention that, but it's also like, hey, look at what's going on in the future. If you're a long-term investor, we are at the forefront of this next stage of innovation. And I feel like it's going to be a balance beam between those two things, right? In the short term, how is your profitability impacted in Q1 and going forward throughout the rest of this year as things get tight, as financial conditions get tighter? How's your profitability? How are you doing? How are your margins? Where are you going to guide for the rest of the quarter? It's going to be like half of that. And I think more so the focus is going to be on, 5-10 years down the road. Here's our strategic plan to make sure that we maintain our position at the forefront of this next innovation cycle, whether that's for Google, whether it's for Microsoft. So it'll be interesting to see how they sort of juxtapose those two things together in these earnings this week.
Yeah, I think if it isn't broke, don't fix it. And NVIDIA just showed that in the last quarter with, honestly, like, not great numbers on revenues, not great numbers on profitability, still an inventory buildup. But you say AI and you say you're going to be at the forefront of AI 90+ times, and the stock rallies, 70 points. So I think that's definitely where these earnings are going to go, especially with the names we mentioned. But we'll see by the end of the week. We'll be covering those on Wednesday and Friday as we get the numbers out. And that'll wrap us up here. Let's take it right over to Ramsay for Bet the Bell.
That's going to do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. All right, guys. Good morning. Let's get right into it. Let's check out the stats from last week. Let's see it, Ryan. So nothing changed too much. I'm pretty sure that Diamond took a dub on Friday. I believe he was 29-18, 62%. Hondo as well took a win, and I believe Snipe, you chose red on Friday. So Snipe took an L. It was pretty unfortunate one to take an L on Friday, taking into the account that we literally closed where we opened, or excuse me, we literally closed where we closed on Thursday, just 10 cents higher. Pretty rough price action. Feel bad for anyone who exercised swings or was taken out of the money swings from Thursday to Friday. So let's get right into it. Once again, it looks like we're going to open where we closed on Friday. We're literally down 13 cents from where we closed. What do we got today? Green or red? And let's add another question into the green or red. Green or red, and do you think that we're going to see some good price action as far as like a trend, or are we going to see another range-bound day as we've been seeing quite frequently? Diamond.
I will go green. I think that we are at risk of more chop today in particular and tomorrow before the higher impact news in terms of economics, and then the earnings, like that'll start tomorrow after the close. And then for the week, I think this week, particularly towards the end, could get pretty interesting, because if you think about it in the sense of we've been consolidating for like 2 weeks at this point. And then this is sort of that crescendo. It's like the end of the move, right? Like where we have all of the news coming out, like the market consolidates before news. If you look at the daily chart and you think about it as like a 5-minute chart before like a big news event, CPI, FOMC, you see that consolidation beforehand, you get the fake move, and then you get the real move. The same thing plays out on the daily chart if you think about it. We have like jolts next week and like massive news, things like that. So consolidation before the series of news, the fake move, and then the real move when the news comes out. So I could see the end of this week getting pretty interesting, and the next week being some fun price action.
Mander.
Yeah, it's really a flip a coin for today because I'm in the same sentiment. I think today probably is some pretty rough price action, and then it picks up towards the end of the week. But if Diamond's going green, I'll take red. Maybe we see a risk off before the data.
There we go. I love it. And last but not least, Snipes. What do you got, green or red? And how's the price action going to fare out this week?
I'm going to have to go with green, and I'm going to want to say we're going to have some good price action this week.
Nice. All right. I love it. So now our next question, I want to go into the hot takes. We got a huge week of earnings. I want to know what your guys' the hot take earnings report edition. Tomorrow we got Google, Microsoft, names like Visa, UPS. Wednesday, Meta. Big week. And then we got some energy names reporting on Friday. I believe we have some semiconductors as well on Thursday, Intel, Amazon as well. So huge week of earnings. Give me your hot takes, Mander. Start it off for us.
All right. Well, I'll start off. I think Microsoft and Google, and I don't know about Amazon. I'm really looking for downside in those two names. But my hot take going into earnings week is that Meta ends the week as the name to be talked about. I think Meta, we've kind of gotten used to seeing these beaten up earnings reports. It just reported $1.76 last quarter, coming down from like $3.50 just a year ago. And I think Meta's kind of in the position where it got so beaten up that people are looking down on it. I could see Meta really having a great earnings report this quarter and kind of outperforming the rest of them.
Agreed. And I mean, dude, that earnings report from January, what was it? Was it quarter one or quarter four? Was
last year?
Yeah. The gap up the first week of January. Unbelievable. Yeah, we'll see what happens. I'm excited for that one as well. Snipe.
I think that wait, could I see all the earnings again? Yeah, I think that Microsoft's going to be pretty cool. I think that Coca-Cola is going to be pretty good after close or before open. I think Meta also is going to be a big one, but yeah, we definitely have some good earnings this week.
And Diamond. Muted.
I'm interested in all the large cap names as well. One of the smaller ones, obviously, we talked about it a little bit earlier. First, FRC reports today after the close. That'll be an interesting one to provide some context around the regional banking crisis. But outside of that, Pinterest, I forget which company it was. It was a smaller company. They were like based on it was like an engineering company based on like software coding, and the all of like the new AI models, they're getting trained on like large data sets. Basically, they'll go in there and have them crawl these data sets, and that's how the AI gets better at, like, you know, whatever it does, right? Whether it's communicating with humans or, you know, offering recommendations, whatever it is. So I'm interested to see how Pinterest and some of those other smaller companies that have really large data sets that I think some of the AI companies can benefit from and use to make their AI better. One of the questions was whether or not they were going to allow these large tech companies like Google and Microsoft to basically scrape their data for free and train their AI. And it came out last week that some of the smaller companies are going to start charge, you know, the Google and Microsoft for that information. And so it'll be interesting to see if Pinterest is thinking along the same lines. I think that if you're a smaller tech company that has large data sets that can be of use to these companies, I think that you're gonna be expected to almost turn that into a profitable sort of avenue for your business, because it really is a pretty big opportunity. And I think that Google and Microsoft are willing to pay to be first in the space. And so it'll be interesting to see how that shakes out. I want to see if Pinterest is at least thinking along those lines, if not already has something in the works. So Pinterest outside of the large cap earnings.
Beautiful. Those are some interesting ones. Looking forward to it. All right. Last question of the day. We're going to bring up a topic for discussion. Ryan, pull up the tweet from Unusual Whales about the take-home pay per $100,000. So this this chart right here is basically describing the total take-home pay for of $100,000 in the United States, the least amount, the states with the lowest take-home pay of $100,000 in the United States. So you got states like, you got cities like New York City, San Francisco, LA, San Diego, DC, Seattle, Boston, etc. This analysis and calculation is used and applied with federal, state, and local taxes to an annual salary of $100,000, then adjusted the remaining amount after taxes to local cost of living using data from the Council for Community and Economic Research. It also, I looked a little bit more into this data. It also took the, as far as the cost of living within these cities, it took the lowest on the scale, not the median, the lowest amount to cost of living. So just the bare minimum. And as we can see, you know, I did some numbers and I calculated that out of these 10 cities, the 10 worst take-home pay per $100,000 salary, 17.5 million people live in these cities cumulatively, a little bit over 5% of the U.S. population. Just L.A., New York City, and I believe it's San Diego. Just those three states make up over literally 3.9% of the U.S. population. Just those three. We got 7 of the top 30 most populated cities, 6 of the top 25. Every single one of these states are within the top 55 most populated cities in the United States of America. I was just looking at this and I'm thinking, why the hell do people even live there? Like 5% of the U.S. population, let alone almost 4%, just from the top, just from those three: New York City, San Diego, and LA. Makes up almost 4% of the U.S. population. Why the hell are people living in these cities? I mean, what the hell is there to live for? Like, you take care of your bills, you take care of Uncle Sam, right? And then you literally have no money left. I mean, $100,000, the median income, or excuse me, the median take-home pay in the United States is what? Median salary. I don't even know if it's less than 60 grand, like, right? Like just about 50. Pretty absurd to me that people live in the United States. Now, on the other side of this, right, the best take-home pay cities in the United States, 9 of them, or excuse me, 7 of them, 7 out of the top 10 are in Texas. The other 3 are Memphis, Tennessee, St. Louis, I believe, Missouri, the whole Midwest. So what the hell is going on in these states, in these states and cities? Who the hell wants to live there? Sal, Diamond, Snipe.
Yeah, well, I think it kind of just comes down to job opportunity. And the more interesting thing here is how that kind of converts, because obviously they have to pay you more in those cities to make people want to do it. So like $100,000 is going to be easier to find in New York City than it's going to be in Memphis, Tennessee for a job. But that is pretty absurd. That's like a 64%. If I was looking at those numbers, right, like 64% of your money going to taxes in New York City, that is pretty extreme.
Yeah, taxes and cost of living. Yeah, it's absurd. I got buddies who live in New York City, and I just feel bad for them. I feel bad. Diamond. It's a beautiful city, great place, a lot of fun. But no.
Yeah, I think Mander touched on it a little bit, right? You have sort of the like your wages are going to compensate for that. So wages are higher in New York than a lot of those low cost of living places in Texas. So I would start there. I mean, I think for a lot of people it is home, right? It's like you're willing to put up with a lot if you call someplace home, right? And like for me at least, like I live in the Northeast, I live near the city, I was born in the city. Like I'm never leaving. Like regardless of what the take home pay looks like that, to me that just means you need to make more money. Like that's what that motivates me to do. So I mean, I'm one of those people that I guess I'm in that 5% who looks at it and sees it as like a glass half full kind of thing. Like obviously not the best case scenario, but I would rather make 100K living in the city, taking home 30 than making 50K and bumblefuck somewhere, not knowing anybody, not having my family around. It's not home. So,
Right.
a lot of us are willing to put up with it.
That's fair. Diamond, you can enjoy your glass half full, while the three of the rest of us on the panel are enjoying a beach somewhere in South Florida. Snipe, what do you got?
Shit. I think some people just like paying taxes. That's got to be. I mean, why else? Makes no sense, man. That's insane. That those numbers that you just put out there. Ryan, can we see that chart again? Or that graph? That's insane. 100,000 take home 35,791. That's insane to me.
Guys, this is after cost of living
California's
too,
raking
though.
it in. They got 5 of the 10.
This is us after cost of living too, right? It's not like you're getting your paycheck for 100 grand and then you blink and it's 35. Like you're still like you're paying for things. Like you know what I mean? Like
this is including rent, mortgage.
Yeah.
Okay, guess what though? You're still getting sales tax on your cost of living. You're still getting tax, bro. You're paying property tax. You're getting lots of tax, man. Uncle Sam loves you.
Yeah, I mean, what's absurd to me is just that we got the number 1, 2, and 8 most populated cities in the United States there: LA, New York City, San Diego, and those literally make up 4% of the U.S. population just within three cities. It's pretty.
Wouldn't it make sense that the cost of living is
doing well there?
Wouldn't it make sense that the cost of living is so high then, if they're the most populated, right?
No, for sure.
Because we talked about like why wouldn't people just leave? If everybody left New York and went to Miami would become the highest cost of living place in America, right? Like that's kind of how it works. Like the more people that you have in XYZ,
and that actually
makes sense.
That actually has basically happened and is currently happening like right now, but it's they got some good tax perks as far as income tax in just the state of Florida. And I mean, it's the same thing. It's the same thing in Texas.
Memphis, right? Memphis, I've heard it's similar. Like
Memphis is exactly similar, and it's funny you say that. That's actually the number 1 take home pay per $100,000 in Tennessee. Yeah, and I mean, you got a lot of states and cities in Texas as well. I believe, if I'm not mistaken, I can't remember which one is in the top 10. They got a couple in the top 10, and Houston, Dallas, El Paso, those all were cities on the what am I
top 10?
It's top 10 like best take home pay after 100 grand. So I mean, it's interesting to see, but it also makes sense as far as why people are moving out of states like that. It's funny, a little bit off topic. I was also doing a little bit of research and I found a tweet by Unusual Whales. It said, let me pull it up real quick. San Francisco is giving thousands to open pop-ups and empty downtown storefronts. The pop-ups will get standard 3 months of free rent and grants of between $3,000 and $8,000 per the SF standard. The city's office vacancy rate reached 25.5% at the end of September, up 20% a year earlier. The start of the pandemic, it was around 4%. 25.5% vacancy in office space in San Francisco, in the entire city and downtown and suburbs. Pretty absurd. Just people are leaving these states. I think that's what we're starting to see, especially after COVID. So it'll be interesting to see what those numbers look like. a year, 2 years from now. But that's going to be it for Bet the Bell. We'll get into Trade of the Week right here.
Take it away.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right, so this was a trade that I took on last Friday. This is the SPY chart, 5 minutes. So basically, if we zoom out a bit, we see Thursday, right into the close, we made this low at 410.34. So that was obviously already just a little level going into the day. At the open, we made a high basically at our pre-market, right? We opened, where did we open? Right around here at 9:30. We came down to that 410.30 level, that Thursday low, bounced pretty quickly and violently off of it, retested the pre-market highs at 412.45, rejected. And so basically I was just looking to see if this level from from Thursday, the previous day, as well as the current intraday low that we bounced off of would hold again. On a 0 DTE on a Friday, just a small move, small bounces can give you a really, really nice return. Although, it's important to manage your risk, manage your sizing. So basically all that I did is I waited for this level. I wanted to see it take relative equal lows and hold. And as we started to hammer into the close of the candle, I took the SPY 411 calls at around like $60 a contract. And I was literally out before the high of this candle right here, this 11 o'clock candle. So basically just a little bit over $1 of move on the stock. It went intrinsic, and I was out for about 70% just on that move. The stock ended up running a little bit over 100% right here, and way over 100% into 445. So it was really just a quick scalp that we took advantage on a range-bound day. I love playing bounces and rejections off of ranges on specific days like so. You tend to get just like violent moves to the upside, violent moves to the downside in a tight range. But I also, when I'm scalping like that, as far as those with respect to range-bound days, I'm taking my profit relatively quickly, getting in and out, setting stops, especially when I'm trading the indices on a 0 DTE. We know how those premiums like to move and how volatile the contracts are. So this was the trade. A lot of people took advantage of it in the Discord. So if you guys are interested, anyone watching, we always have a rolling 7-day free trial. We alert trades like this, like so. So that was it. Yeah, that's the trade of the week. Looking to get a couple more like that this week.
Fantastic. And that'll wrap us up. We did, in fact, beat the bell yet again. And as Ramsay just mentioned, 7-day free trial. If you want to come trade with us in the Discord, it's www.kane-capital.com. You can come check that out and trade with us for free for 7 rolling days. And that'll wrap us up here. We'll see you guys in the Discord and catch you guys here Wednesday at 8:30 a.m.